Welcome back to the channel, everyone, and thank you for tuning in to another great video. Today I want to show you a few setups using supply and demand. Okay, now lots of traders or individuals that may be new beginner traders may be struggling with the idea of how to trade supply and demand. Okay, it's just like anything else in life, guys. You've got to spend time and practice things. All right, it's not going to happen overnight or unfold. Especially when it comes to trading, because this is one of the hardest things that I've actually ever done, is really trying to always be in tune with the markets and just know what's going on, okay? And knowing which setups are great setups and which ones are not great setups. Now, everyone that has been following the channel knows when I look to trade supply and demand, the number one thing, especially when it comes to trading off of my 12 range chart directly, I look always for a break of structure, all right? But first and foremost, you want to be able to identify, is the market trending? When we trade supply and demand, you must understand you are looking for new highs or lows to be broken, meaning the market making a series of higher highs and higher lows to the upside, creating a new high every time it breaks higher. Or the same thing in reverse when the market is making new lows, meaning making lower lows and lower highs, basically breaking and taking out a new low. Some people will call that where areas of the market's breaking above resistance or breaking through an area of support, creating a new low. Now, the part about supply and demand, okay, we just talked about the break of structure. That's the number one thing, looking and making sure we are taking out new highs or lows. Supply and demand, simply put, is nothing more but aggressive selling or buying. Demand, aggressive buying; supply, aggressive selling. So when we get that break of structure, when I'm trading off my 12 range chart, I'm looking for price to pull back. I want to identify, was there an area of aggressive buying when we're looking for to take entries going long? Was there an area of aggressive buying, a demand zone to take the market back up? And in reverse, when the market is moving lower and price pulls back to an aggressive area of selling, which is supply. Okay, so I want to show you some examples today using the 12 range chart, specifically when the market has just been pushing up. And that's what we've been doing the last few days. The market has broke the yearly highs and has been trailing to the upside. All right, so disregard this green box right here where it says demand zone from the 60R. That is a demand zone off of my higher time frame, my 60 range chart. Okay, now I trade range based charts, the same method or strategy of how I actually trade. All right, you can use it and trade off of time base, tick base, volume base. It really doesn't matter, okay? Supply and demand is a universal strategy. It's just all in how you are able to use it in your own trading, all right? So what I'm going to show you here is pay attention to these red blocks, okay? These red zones. These are areas of supply and demand, okay? Now, we want to look here and see what happened off the 12 range chart. What do we see? The market is doing what? Making moves to the upside, especially when it started breaking higher, moving here, say from May 31st, okay? So from this area here, we see price doing what? Making new highs and new lows, breaking to the upside. Each time it breaks higher, it's taking out structure, okay? Now, I have this area here marked from June the 2nd, this box here. I'm going to blow it up for you, okay? Again, disregard the green box. So what we see price do here is break higher. It takes out an area of structure right here, which means it's made a new high. It pulls back, it folds back, okay? And it breaks higher, taking out structure right here. Now, on the move to the downside here, it made a push down, pull back, and it broke lower here, okay? Then it pulls higher, taking out a means of structure, or taking out 42.57, which is a high, okay? So we broke structure, right? Remember, that's the number one thing I look for. The second part is, once we get the break of structure, I want to identify or see, once price was leaving this, creating this swing here as it broke structure, was there a key area where there was a nice aggressive buying that took place within the swing to the upside? Right here and then right here. So I'll blow it up a little more for you, okay? This was the first, just an example of a demand zone, okay? So price pushes higher. When it retraces back, we can go ahead and, or before it retraces back, we can go ahead and mark our supply zone. I would mark this area right here. Now, price retraces back. If price breaks below, okay, the actual zone. So just imagine if I marked another red box right here at this zone right here. If price pulls back and breaks right below this area here, which it did, okay, which it did, and actually, let's see here. Let's blow this up even more. All right. It broke below, but it didn't close below. So what I would consider as a break below a zone, if I had this box, if I had a box drawn like this, let's do this right quick. All right. Okay. We see price comes right to the tick, the bottom end right here. Okay. Now, it doesn't fully break right below and take out that complete zone. What it does is, I'm going to take this box off now. It comes down, all right? And then the next candle it closes right there, but the next candle that closes never closes below the zone, all right? What it does, it wicks that area out. When I see moves like this where price comes down, all right, and I would have a zone here, but this is also a zone right here. So I've marked this zone up here because what it did, it came down that zone and bounced just as well from that zone there, that demand zone. But when I see something like this, all right, and price fails to close below a zone, the next candle is a bullish candle to the upside and closes, which to me is a sign of weakness. Price is wicking out a zone and turns around and pushes higher. That's an opportunity for me to go long. Now, I'm not going long immediately. I primarily want to see a break of a candle in the opposite direction. Meaning, I prefer to see price close above the top end of this wick right here. All right, above 54.5. Once I see that, and that does happen with the close of a green candle above it, or let's say this candle here closes at 54.5, and we're tick to tick right there, and then the next candle starts to form right here, and you know, I'm already aggressive more than likely, even though we don't get the full close, because that's how I trade. Now, you can wait and be more conservative and wait for a full break above it and then go long. But either case, we are aiming for liquidity at that point once we get into the trade. Rejection off the demand zone, okay? Break in the opposite direction and take your trade at least to the top end of this area right here at 68 and, well, let's say 67.5, okay? That will be my first means of profit target or TP, okay? So let's say you wait to get in right here at 57.5, all right? And then you take price on up to what? To 67. It's a 10-point run. But look what price does. It continues pushing higher. Well, we know that price does what? It pushes and pulls. So it means it moves higher, pulls back. So it does that, but it's aiming for the top end here, the previous high from when price would trace right here, and it pushes back up and breaks that high there where liquidity is as well. So there's liquidity resting here and at the highs right here. It runs both locations, okay? So imagine if you got into the trade, say, if you're more conservative at 57.5 and took it all the way up to break or take out liquidity here at 73. You got yourself a nice trade, even on one contract. That's a beautiful trade setup. Multiple contracts, you did extremely well. But what I'm trying to get you to explain is the power of supply and demand, okay? Waiting for one, a break of structure, two, identifying, in this case here, demand, and then waiting for the full-on rejection. Now, what really sets it off, guys, what really sets it off is when you have a demand zone where there is a gap, okay? Meaning an imbalance resting where price broke higher out of, say picture this as the demand zone, okay, right here, breaks higher here, breaking above the red candle, closes, and it doesn't immediately pull back, but takes off. Aggressive buying, pulls back to demand, okay, fills the imbalance. We get the fake out here with that bullish green candle that wicks below the area of demand. Bullish green candle closes, and it takes off to the upside and takes out 73.5. Beautiful run to the upside, okay? That's just one example. I'm going to go through another one here. All right, let me squeeze this together, and hopefully you guys understand that. Okay, let's talk about, I'll show you another example of a demand setup, and then we'll go to a supply right quick, okay? So, after that, saw right here, price does what? Pushes higher. High, pulls back, high, okay? Pulls back, higher low, boom, breaks up and makes another higher high. Now, this is a break of structure when price broke above 97 3/4, okay? Once price breaks structure, what are we doing? The next step is we will always want to look for a demand area, aggressive buying zones, okay? Now, what makes it a high probability setup, in a sense, is where price at a demand zone in this case here, what leaves behind an imbalance. So this area right here is a demand zone. Aggressive buying after, well, not say after, but when price broke structure right here, we had an area of aggressive buying. Demand. Wait for the retracement to the zone. Again, what do we see that took place right here? We get an imbalance right here, okay? Price pulls back to the demand zone, aggressive buying, pulls back to the demand zone. It fakes out and wicks this area again right here with this bullish candle. See it take out, it broke right below the demand zone, but didn't close with the closure of a candle. Wicks it out, boom, bullish green candle. Now, again, wait for the confirmation. If you are more conservative, I'm more likely I'm going long right here because I know what's going on here. All they're doing is hitting sell side stops, okay? All right here, grabbing liquidity to push the market higher. Okay, they wick it out right here. Boom, close with the green candle here, this bullish candle here, and then what happens? If you got in here and you're aggressive at 91.5, you take it back up to the top end here, the prior high. Liquidity resting right there, 43.01, say and a half or a quarter there. Pick yourself up an easy 9, possibly 10 points because it did continue running higher there, all right, before folding and breaking lower. Demand setup, once again, similar to the last one. Now, let's go to a supply setup, all right? Now, what we had that took place here, take a look. So we got a break here, higher, pull back right here, but price doesn't close, okay? It doesn't close above. What it does is it goes up here and hits these buy stop orders right here, all right? It wicks it out, grabs liquidity, flushes lower. It takes out structure right, let's see here. Takes out structure right here below 85.5 and as well as 80 and a quarter. So once price breaks structure to the downside, okay? Sorry about that, guys. My puppy, my dog barked in the background, so please forgive me. But it breaks structure below. It pulls back. We're immediately looking for an area of supply is what I'm trying to say. Aggressive selling, okay? And what makes it, again, high probability, we're looking for what? An imbalance at a supply zone, okay? All right, so price pulls back. Again, right here, we have the imbalance with the area of supply right here. All right, and again, all we're doing is waiting for rejection, typically with meaning the break of a candle in the opposite direction kind of thing. So this last up green candle right here taps into the zone, fills the imbalance from here to here, break of a candle right here below 83.5 or 83.25. Well, excuse me, 83.75. Once you get that, you know, you can take the trade. We're back down to this two areas of liquidity below. Back here to the low, there's liquidity. We have equal lows right here. Boom, price comes down. What does it do? It breaks. Well, it hits it tick to tick pretty much. All right, pulls back and eventually takes it out. All right, so I just showed you three examples. Two examples of demand zones and one supply setup, and it's pretty simple, guys. All you're doing is just looking for areas of aggressive buying, but the number one thing I always look for is what? The break of structure. That's the key to it when price is moving in one direction, meaning trending in one direction, break of structure, pull back, all right? Then if the tide turns and price starts breaking structure in the opposite direction as it did here, moving lower, break of structure, pull back. Now we're looking for the opposite to go short and pull back to an area of supply. But that's all I want to show you. It's not hard. Just really take the time to practice, okay? Not every zone is going to work 100% of the time, okay? If you think that every time you trade that you should, and you say, oh, this is the setup, it's perfect, it's a high probability zone, that doesn't mean that every single time it's guaranteed to work. Nothing is 100% when it comes to trading. The thing about it is knowing what to get out if your trade does not work. Now, before I leave, I do want to say this, okay? Look, let's just take this last setup here, the supply zone. Let's say you got into this trade here and it didn't work out. Price pulled back to this area of demand, supply here, and it started rejecting, but you didn't get the full break to the downside. It turns back around, okay? And the moment price breaks above, say the area of supply, then get out the trade, okay? The moment you get the break, that's your stopping point, all right? Or if you put your stop right here on the back end, from, say for instance, you got in at the break of the candle, and you pitch your stop at 87.25, then get out there. But always provide yourself some room so that just in case they come back up here, just to kind of stop traders out, you don't get stopped out. So maybe put a few ticks above this area here or above the supply zone. If you're not comfortable here, then over here, at your point of a place of entry where you're entering from. Okay, so let's say this too. Let's say the market starts moving lower, but it doesn't want to run liquidity. Okay, and it's kind of a fake out to just push higher, but you do get the rejection. Price pulls down, he pushes down here by a few candles, and then it starts to turn around, and then you start to getting a green candle close, and then another green candle close. So if price pushes and rejects his zone right here, as it did, and then it turns back around, and I start getting the closure of candles in the opposite direction, like here, starts breaking lower, and then starts moving higher, green candle close, another green candle close, say for instance, then I'm going to get out, okay? Because it's a sign that price probably does not want to push any lower. Now, I'm not saying that it won't just kind of pull back and push lower, but I'm probably going to get out more than likely once I start seeing rejection of price moving in the direction to the downside. It immediately wants to start pushing back up. To me, that's going to be, okay, I need to get out, all right? But anyways, I appreciate everyone tuning in and watching the videos. If you're interested in joining the Discord and you're a first-time viewer here on the channel, please, first and foremost, take the time to go ahead and sub to the channel by clicking on the red subscribe button down below or somewhere, you know, wherever it's at, guys. Maybe to the, I think it's the lower right hand of the screen of the video. Click on the subscribe button. Make sure to click on the bell next to it. Turn your post notifications on so you never miss one of the uploads. And please drop a like on the video by smacking the thumbs up button. Also, if you're interested in joining the Discord, you can find the link to it down in the description portion of the video. You know, it's where we as traders come together, guys. I'll just tell you, there is a channel on there called the Trading Floor. We come together. We share our screenshots of our actual trade entries during the current session so that other individuals that may be in the learning process or maybe have questions can grasp and understanding why certain traders are trading certain zones. And I post my entries on there when I'm trading. I try to post just about every trade that I take during the day. I put it on the Discord. Now today I only took one trade, and that was a long entry, and I did post it on Discord. If you go back and take a look, what time was it? It was at 1:04 p.m. today. I posted a long entry I took, beautiful long rejection off of right here. This not this zone here. It was off of a 60 range demand zone. Okay, we tapped into it. I looked for rejection off my lower time frame, the 12 range, to go long. So either way, but also if you're interested, because people always ask me, how do I become an elite member on the channel and how much does it cost? It's $6.99 a month. Okay, yes, a month, basically a price of a cup of coffee. Okay, what do you receive? You receive the trade breakdowns as well as the video playlist of actual videos that I put together by link that just kind of cover the pertinent information to the means or way that I actually trade, including the strategy. So, but you also get the trade breakdowns to where I go into detail and talk about my trade entries. Okay. And I believe what I'm going to do is I'm going to make a video here to post this week on today's trade that I took in reference to the nice long that I took. I'm going to post that over on for the elite members. Okay, so the elite members have access. It's a private community that's not made public to those individuals. It's just your way of basically supporting me as a content creator. And I love to give back perks and rewards and kickbacks. So that's what you do receive as well. You get the priority. Reply to comments, the emojis, the badges. You also receive the trade breakdown and that video playlist or the links of those videos that I'm talking about. So I appreciate everyone of each of you guys who have become and already are elite members. Thank you for supporting the efforts here. And I'm going to leave you guys with that. Have a great weekend, okay? The market is now closed, and that's it for me today in this video. I'll see you guys in the next one.